Well, hello, everyone. My name is Bill Bush with Horizon Financial Group, and certainly want to thank you for joining us today for our 2023 Last Chance Financial Planning Checklist. Really appreciate your time today. We got a lot to cover, so in the next half hour or so we're going to jump into it right now. First, our disclosures. For those of you folks in the Baton Rouge area in Louisiana, this is the address of our new office. Just moved in about 3 weeks ago. So over on Jamestown Boulevard, stop by and see us if you can. Going to start out with a story. So if you know about Horizon, you know that there are three Bush brothers here at Horizon Financial Group, Pete, Andy, and myself. And we actually grew up on this farm in southern Indiana. And so we kind of dabbled in a lot of different things on the farm, grew a lot of crops, tomatoes, cucumbers. But the biggest crop we had was by far corn. And so if you've been in one of our retirement plans and you've seen one of our presentations, we reference this a lot because when we were kids growing up on the farm, we would run through the cornfields, and this was kind of our view. And isn't this a little bit like the daily life? You're just kind of in your zone, your day, you're dealing with things. In our case, we're running through the cornfield. Here come leaves and stalks at us. We kind of lost our direction, really weren't sure where we were in the field or where we were going for that matter. And so we make that analogy to that's sort of just the daily life we go through, dealing with things at work, dealing with things at family. And so what we thought we would do here is to sort of change our perspective a little bit, our viewpoint, and kind of zoom up above that, find out where we are today, look back at these last 11 months or so. What are some of the opportunities that still lie ahead in the next month of this year, and then look ahead forward to 2024. So it's all going to center around this last chance financial planning checklist, because there are some things to sort of be aware of as the year comes to a close. And we found this checklist and thought it was a really good tool. So use this as sort of a self-assessment tool, and we're going to go through each one of these categories and see what resonates with you, something that you may need to take action upon. And so it's kind of divided into 8 different categories. And this is just the last chance to review these before some of the things that are actionable will sunset at the end of the year. So the 8 categories: taxes, retirement, investments, insurance, milestones, health, any changes, and then family. So without any further ado, we're going to jump right in. There is a section if you have professionals that you need to reach out to, or if you need a referral for some of these areas, like a CPA or an insurance agent or attorney or any other type of advisor. There's a place to write that in. And so use this worksheet as we go along. So we're going to go over each section, just check it as you go, and then make some notes. If you haven't downloaded the checklist, it is available in the chat. We're also going to talk about a few other resources at the end of the webinar that we also are going to make available to you. So let's start with taxes. And here are some of the things to sort of get a handle on as we end the year out. And the first thing is just project your income for 2023 and kind of look ahead toward the next year. Were there any changes, job changes? Does it look like you'll have the same amount of income, more? The next one is project the 2023 net investment income. This one's important because this will sneak up on some folks. This net investment income tax has been around about 10 years, was passed as part of the Affordable Care Act. And so folks with a modified adjusted gross income over 200,000, and if it's married filing jointly 250, and you have net investment income, they're a little surprised to know that there's an additional 3.8% tax. It's on the lesser of that net investment income or the lesser of the MAGA above that limit. So that's something to flag if you think you might be in that category. Next one is review the tax plans in light of the Tax Cuts and Jobs Act. Jobs Act. We're going to go over those tax brackets in just a little bit. Big thing though is gains and losses this time of year. That also involves collecting the cost basis on some of those securities. So if you've sold out of your position, what was the cost basis? Did that trigger a gain or a loss? reviewing appreciated property like real estate. So, you know, if it's your primary residence that you sold, there are exclusions in terms of how much profit will trip up a capital gains. But if you were in a position where you sold some property, definitely check into that. Check loss carry forwards from last year. So when you think of capital gains and losses, you can actually take a $3,000 loss, apply that, and reduce your taxable income. But if you had more than a $3,000 loss, capital loss last year, some of that, the unused portion, can carry forward for this tax return year. Potential deductions and credits, we're going to talk about some of those, especially deductions to your taxable income, thinking of IRAs, 401ks, that kind of thing. Along those same lines, donations to charity, and any gifting plans, and we'll get into some of the gifting and tax exclusions or lifetime exclusions a little later. So the income tax brackets on the left is where we currently are. Now the ranges of income in each one of these brackets is adjusted every year, but right now it's 10, 12, 22%, 24, 32, 35, and 37. So that's what the Act did back in 2017. So if those brackets sunset in 2025, that means no action is taken by the legislative branch to continue those rates. Here's what happens to those. The 10% bracket stays the same. The 12 becomes 15, 22, 25. You see the difference on down the line. We don't know if those are going to sunset or if they'll remain the same, but it is something to be aware of. When those income tax brackets were dropped down, that gave some folks the opportunity to say, well, I might do a Roth conversion, or the cost of that Roth is now a little cheaper than it was. So just know that that could or could not happen, but be aware that possibly there might be an increase in taxes down the line. Let's talk retirement now. So we're getting to the end of the year, and we have max out 401k contributions, including catch-ups. This is a good opportunity just to look at where you are on your contributions so far this year. And is there an opportunity as we head to the home stretch to maybe put more into the plan? Same thing for IRA contributions, including catch-ups. We'll talk about the catch-up contributions as well. And then is there a scenario where Roth conversions make sense? If you're retired and you have to take those required minimum distributions, stay in front of that. Here's one for newly self-employed folks. Think about opening a retirement plan, like a solo 401k, something along those lines. And also, if you're a business owner and don't have a company-sponsored retirement plan, it's a good time to look into that because there are some tax breaks we're going to talk about. Check the status of all retirement accounts. So we come in contact with a lot of folks who have these little pieces of their financial life, and they've left a job, and they haven't brought their 401k over into the new plan. It's a good time at the end of the year just to sort of see where you are, and does it make sense to consolidate some of those. Social Security, we're going to mention in just a little bit, but if you're getting close to 62 to 70, that's the range that you can claim, and there's plenty of options in there. So the 2023 contribution limits, so this is for this year, $22,500 in 401k, 403b, 457 plans. If you turn 50 this year, even if it's by December 31st of this year, you qualify for the 50 plus catch-up contribution. So then the far right column, you add those two together. If you're 50 and older, you could put $30,000 this year into those type of accounts as long as you earn that much or more. Simple IRAs, 15.5. The catch-up there is 3,500. So the limit for 50 plus is 19,000. And then IRAs, whether it's Roth or tax, traditional, it's 6,500. The catch-up is 1,000, and the limit is 7,500 if you're 50 and older. Here's how that changes for next year. 2024, everything kind of moved up. You see, $500. it's kind of indexed. They just announced that a few weeks ago. So for 2024, 23,000 in the 401k, simple IRAs up to 16, IRAs up to 7, and you see the catch-up contributions are unchanged for 2024. So the limits basically went up 8,000. You'll note on the bottom, some 403B and 457 plans do have and offer other types of catch-up contributions, but it's a good reminder just to check your summary plan description and see what options are available to you. So we get this question a lot this time of year, and it's, hey, what do I need to do to max my contributions throughout the year if I wanted to do it evenly throughout the year? So you think of retirement plans, each plan is slightly different when you can increase or decrease your contributions. Some allow you to do it every pay period, some allow, once a quarter. All plans allow you to make that change at the first of the year. So maxing it out evenly throughout the year, if your company has 24 pay periods, 958.33 gets you really darn close to there. And if you're 50 and over, it's the 1270.83. 26 pay periods and 52 pay periods. There's still a few companies that do that weekly. Grab a sip real quick. Okay. Mentioned starting a new retirement plan. There are some great tax credits available if you're a business, especially if you have under 100 employees, and there's a really sweet spot even if you have under 50 employees. Look into those options. We have retirement plan specialists here at Horizon that can help you out with that, but there are tax credits, including the Secure Act added new tax credits for employer contributions that phase out over a 5-year period. And definitely, as we mentioned, explore some self-employed options there. Some changes to the required minimum distribution ages went into effect thanks to the Secure Act, was passed in December of last year. So here's how it affected you. If you're born in 1951 through 59, the RMD age was pushed back to 73. So it's now 73. And if you're born in 1960 or after, it's now 75. Here's a look at Social Security. We do have a video on our website that gets into this in depth, but just want to mention this, that, the Social Security full retirement age actually varies. Some people are still under the notion that it's 65, but it's actually 66, 67, or somewhere in between, depending on what year you were born. So you see in 1955, if you were born there, your full retirement age is 66 and 2 months, all the way down to if you were born in 1960 or later, your full retirement age is 67. So the FRA, the full retirement age, is the time that you can take it without a deduction or being penalized, or without delayed credits. So if you want to, you could file as early as age 62, but there's a reduced benefit for doing that. You can delay it to age 70 and you get delayed credits, 8% a year, quickly on Social Security. Investments, this is important near the end of the year. Confirm your goals and strategy. We've had a lot of volatility, especially over the last 2 years. So review the asset allocation for rebalancing and see if there's some opportunities there. Fundamentals of your portfolio positions. Are the investments that you're in, do they make sense? And then revisit income and savings needs. And I like to always say, revisit your savings rates. And is the income that you're making now covering all your costs? And what is left over to put away for your future self? Re-examine asset allocation or location, actually. And I think in terms of this, with the high interest rate environment we've been in, there are some opportunities that, money market accounts and things like that are paying a little more. Depends where you park your money, but there's some opportunities out there. Also think of Roth versus pre-tax. Reviewing outstanding loans and mortgages, and I think of loans and debt. Get a grip on that. And if end of the year is a great time to make a plan for debt reduction. So a few years ago, I downloaded the debt avalanche and snowball spreadsheet, and you can put all your debts in there and stack them how you wish and attack that. Dividend distributions and employee stock options. If you have the employee stock options, always good to revisit that plan just to make sure you're doing what's proper and you're making most of those opportunities that are available there. Dividend distributions, whether you're taking those in cash or reinvesting, those, for the most part are still going to pay taxes on that in taxable accounts. Insurance, property casualty policy, review the costs. And I get in the habit of doing this every couple years. And for a while, I didn't even look at it, but there's some opportunities here. Maybe you hear this word bundling a lot. In my case, I went out and shopped to market on different coverages, home, auto, et cetera, and found out bundling wasn't the best way to go. Also, review your health insurance coverage. I think open enrollment, depending on the company, may have closed already. It may still be open, but is there, a more advantageous plan for you? And then were there any material changes in life, business, financial circumstances that might require either an insurance solution or adjustments to your current plan? Milestones, go over these real quickly. 50, we mentioned catch-up contributions. That's if you turn 50 even up until December 31st of this year. The rule of 55 there is you can take distributions from 401ks without penalty. If you're retired or left your current plan, you can't take it from other plans, but the one you most recently left. 59.5 is the distributions from IRAs and without penalty. Mentioned Social Security, that age range. Medicare, we have a video on the website there that gets into the ins and outs of Medicare. Look under Connect and Events at the Horizon website. And then 73, the RMD age we talked about, which changed at the end of last year with the Secure Act. Health, and I think one of the things, the boxes that's not on there that probably should be, is just think about prevention in your own health. If you haven't seen your doctor in a while, maybe that's a check mark to make. Review the health insurance plan that you're on. If there's a chance to adjust that plan to better suit you, that's something definitely to look at. Reviewing the HSA contributions for 2023. So the health savings account, the HSA, they're attached to a high deductible plan, and those have dollar limits. It doesn't matter if your employer put some contribution in there or you contributed through your paycheck throughout the year. There is a limit there, but you also have until till tax deadline to make contributions for the 2023 tax year. So remember that if you've totaled up that employer contribution plus what you've already payroll deducted, there may be some room in there for you to do an additional. There are also, if you're 55 and older, there's a catch up there. It's $1,000. Flexible spending accounts. So those are different than HSAs, and they could have a carryover provision. You're supposed to, most plans, you spend it by the end of the year, but some plans now allow you to have a certain amount carried over to the next year, or even a grace period where you could use that amount up for a couple of months. Medicare enrollment, it's open enrollment for Medicare right now, but also if you're close to the Medicare age, again, we have some resources on our website that might help you out there. Some changes to think about. Moving is a big one, and that involves a lot of course, making sure because we just moved and we know it. Addresses are updated, those kind of things. Major asset sales. Did you transfer any major financial assets? Did you do a rollover, from one of your employer-sponsored retirement plans? Did you refinance your house? That one probably didn't apply for most folks today and this year. Changing jobs is another one. We mentioned, orphaned retirement accounts that kind of hang out at your former job. If that applies to you, does it make sense to combine that with your current one? Did you lose your job? Did you get married? These are all transitions. Getting married, you think about beneficiary updates. This is a good time of year to pull out those accounts and make sure your beneficiaries are up to date. Also, if you ended a marriage, that's something as well that could have consequences. lose a loved one. Maybe you inherited some assets from losing a loved one. Do you have parents or family members in need of assisted living or other services? And, do they have their financial house in order, but also do they have wills and powers of attorney, those type of things? If that applies to you, check that one for sure. Severe illness in the family. If you have high medical costs, depending on how high it is, that may be something that you can claim on your taxes. And did you receive gift or inheritance? Just a reminder on the contributing to education accounts. So 529 accounts are pretty popular. And in Louisiana, we have the Louisiana Start account. If you're contributing to that by the December 31st deadline, you want to get your contributions in there so you can get that state tax deduction. Review and fund any trust that you have. Making cash gifts to family members. So the gift, any gift 17,000 or under, you don't have to report to the IRS. If you do make a gift over 17,000 to an individual, then you do have to report it, but it's not necessarily a taxable thing. You can claim the lifetime exclusion there. And then if you plan on making charitable contributions, now's a good time to firm up that gifting. And then what really changed for you? So we were looking around, we're looking back, and think about this time last year. What did you go through in this rolling year in the last 12 months? What changed for you in 2023? And what do you want to discuss as we look into 2024? And those can be small things, but there could be pressing issues that you have. Okay. Couple other resources. I'm going to make this one available right now. It's the 2023 Key Financial Data Worksheet. So this is the numbers that really have to do with this tax year. And then the 2024 version of this is going to be available shortly. They're firming up the tax brackets and some of the other financial figures for 2024, but for everybody that's on this particular presentation, we'll send the 2024 version out in an email, but the 2023 version is available if you want to download that. It's a good handy resource to have, and please make the most of that. It'll summarize a lot of the things we went over on this presentation. Okay. And then I want to mention this. We engaged with a company that has what's called the Passport Package. And end of the year, you're looking forward ahead to 2024, and it's a good time to take a self-assessment of where you are now and set goals for the future. And this all involves 8 different mindsets. It's a 5 to 10 minute exercise. And what generates out of this is a professional, personalized report that has some actionable items for you. So this is available for you to take. It's on our website. There's a version called the Expansion Passport that is for folks 45 and younger. And so there's the QR code, there's the web address as well. But if you just go to horizonfg.com and scroll down to the main page, you'll see the icons there. There's also a version for folks 45 and over. It's called the Walkaway Passport. And again, real quick assessment, kind of gauging honestly where you are now. And then the next step is, where do I want to be in these 9 different mindsets? All of them, not every one of them is financial, but they all have financial implications. Some of them into healthcare and that. So I encourage you to take that. We'll forward you the report, and might be revealing if you do that. The other resource, just to mention, is The Runway Decade. This is a book Brother Pete and I came out with a little over a year ago, 4 or 5 months ago. And the subtitle is Building a Pre-Retirement Flight Plan in Your 50s. But really it's for folks, maybe mid 40s and above, who are kind of thinking about, okay, I've had a long working career, and now this notion of retirement is sitting out there on the horizon. What steps do I need to take? in the next 10 to 15 years to get in front of this while I still have opportunities, while I still have runway left. And so the website, runwaydecade.com, check that out. There are other resources there. We also have a podcast that we do. We've talked with a lot of folks in their 50s and what their plans are as they prepare for retirement. So those are a couple of resources for you. Again, the 2023 key financial data is in the chat if you want to download that. And then, of course, the checklist is there as well. Go to runwaydecade.com, and then the passport, which is on our website. Okay, so that is just about going to wrap it up. But if you'd like to chat about anything that we discussed today, drop us a line. info@horizonfg.com is the best place to get in touch with us. And we can go over your checklist if you've made some notes today, and kind of think about some of the things that need to be addressed as you end out this year and plan for next year. If you've taken the passport, we'll forward you that report, and we could set up a meeting with you as well to go over those results. So that's going to wrap it up. Thanks for joining us, and hope to see you soon, and hope you have the rest of the 2023 as a great year as you go into the holidays. And I guess I'll be the first to say, hey, Happy New Year in 2024 as well. So that's going to wrap it up. Again, reach out to us. One more time, there's the email address, info@horizonfg.com. We'll see you soon.